Oh, I have been graduated to preacher now, Alex. Good morning. Hope everybody's doing well. Had a great weekend. So maybe this week, the rest of the markets will move out of these sideways trends that they've been in over the last month and a half or so. I tell you, this is a pattern that better not fail. It's a very strong pattern that's occurred here over the last week or so. And just reminding, over here is where we had gotten the sell signal from our internals. And we had that nasty drop, percentage wise, it was pretty big. And then we had this chop and it's sideways in the retest, the S&P, and then up. So this pattern that better not fail, and it rarely does, tell you the truth, pretty reliable, is a sideways consolidation near resistance. And you can see the unfilled gap here. It did clear this high. And then on Thursday, we had the sell-off and buyers stepped up. It was looking pretty ugly intraday. And they pushed it back up into the range. And you can see all the candle bodies over here are about in the same place, give or take, right? You can see as I expand that a little bit. And then on Friday, we had the dip down and it came back up. And buyers stayed there into the close, showing their strength, authority, call it whatever you want. So again, the retest pattern, the move up into the gap fill. Sometimes we call this absorbing supply, meaning it's at an area of resistance, obvious place where there's going to be sellers. The buyers, the demand at that time takes in whatever the supply is. And then on the dip, it even breaks below the low. And so buyers are lurking down below here and they push it back up again. Strong. So we've had a sideways correction here over the last several weeks, about 6 weeks or so, I guess, give or take. And now we have a pattern that says the markets are ready to go up. The uncertainty created at that time, the extreme move, this accelerated move, the extended breath, the sentiment that was in the stratosphere, and now it's worked it off to some degree. So everything but technology, as you know, has just been chopping around, going sideways. So it's been a more difficult environment other than those particular stocks that are in favor, where the institutions are chasing. So maybe it's time, of the concept that we call bringing up the rear, where the underperformers, whether it's in the transportation sector or financials, which came on strong at the end on Friday, they have this big wide range bar. They're all the big giants are reporting earnings this week, so that's going to be a factor. Keep in mind. So I guess that big green candle on Friday on the XLF, the financial ETF, is saying, hey, no matter what happens, even if the earnings stink, who's borrowing money during coronavirus time? Business is going out of money. I guess the expectation is going forward, it's all going to be okay. So when I say this pattern better not fail, because everything that, historically what's happened here, it goes up. So this is a representation of what institutions, traders are thinking, as I explained what that is. So if by chance it should fail, there's going to be a swift move to the downside. Now, we don't know if it will. It's not supposed to. We've got a line in the sand there. And as long as, even holding Friday's low, it really should hold Friday's low. With a pattern like this, we know it's gapping up here a little bit. So it should keep going. It should make new all-time highs. Should. But so as always, we don't know what the future is, but that's what should happen. So that gives us a bias of what should occur and what shouldn't occur, meaning it shouldn't go back down here. Something's wrong if it goes back down there. Black and white, no indicators needed, pure and simple. This is a bullish pattern. It's a corrective pattern. This side of it is bullish. The breakdown here and the recovery tells us that buyers are aggressive and they're looking to buy more. Right? So before we go on to the others, what is the dangers here? Well, sentiment is at an extreme. The wrong way option traders are behind this and saying it's going to work. I don't like being on the same side of what I'll just finally call them idiots, because historically, they're always wrong. But well, I shouldn't say always. Sometimes, like they say, the broken clock is right twice a day. Anyway, you've got this bottoming pattern as well in the breadth. So we don't have a sell signal. You need both of these to be in alignment up here. So there's not a sell signal. So I don't like this with this pattern, but we'll go with it until proven otherwise. If this breadth was up here and this was up here, I wouldn't. I'd expect a breakout failure. So maybe this can get more extreme as it did over here, and we would see maybe some type of an accelerated move. You could see where the breadth over here was at an extreme, another breadth. The sentiment was at an extreme, and then eventually breadth got there, and a little sideways chop, and then it continued to go higher to where we got the sell signal. So that seems more likely what we're in store for here, where this eventually moves up while the laggards bring up the rear. What are the laggards? The S&P 500, the transports, the Russell, aerospace and defense, basically everything except technology. Now, anything technology or internet related has been doing well. Right? So SPX levels, you can go below Friday's low. I don't know about the upside unless there's some kind, if there's some premium up here, but, based on this consolidation, the call side of that spread could be dangerous today, based on this pattern, and the downside should be a no-brainer. All right. So maybe waiting for some kind of breakdown failure to show buyer showed up on a dip again, or vice versa. But just based on the daily chart, the put side of the credit spreads should be where the easy money is. So here's where the money is flowing into. I mean, it's so darn obvious. It just keeps marching ahead. The wide range bar just, as I mentioned last week, typically results in a slowing in momentum. And that did happen for 2 days. And then it continued higher again to new all-time highs. So money is flowing into here. Internet, Amazon, the FANGs, Apple. And so part of what I thought over the weekend, writing in the advisory letter and in the videos was, look, there's no doubt that this is a bit extended here. Maybe it could become more extended. However, in a situation like this, this may not move down much, but maybe it's not going to go up as much. Whereas, we start looking at, what's been the laggard, the S&P is where things begin to accelerate, and that could be the financials, which did well on Friday, and have not been participating. Could be Dow stocks. You could see underperforming even more so than the S&P 500, but a bottoming pattern, and not exactly the same, but the breakdown and the recovery here on Friday, and now it's right at the high here, but based on this pattern, it should take out this high and begin to move up. We've got the Russell, which has been underperforming, and you can see a similar sideways pattern since the correction, where prices came down hard and they've been chopping sideways, building a new support area. Notice the wide range bar reversal there, and now we've got that 180 type reversal. We still got this congestion to deal with, but look, based on everything that we're seeing, it's supposed to go up. So it better, because look, if it doesn't, well, you're going to have a whole lot of institutions caught on the wrong side. So we don't know what will happen. Set alerts down at these significant reference points and just be aware of them. And as long as it's going up, well, just go with it. But just realize that we have a situation now where, the move down, the retest, and the reversal, it becomes more and more obvious and convincing, especially with this kind of a pattern and what the financials did on Friday, that it's time that the uncertainty, and this is a picture of uncertainty, no doubt about that, that for whatever reasons at this moment in time, the pattern is saying that the uncertainty should come to an end. Who knows why? Not me. Okay. But maybe this whole thing with the masks and all of this with the corona has just gone too far, too long. And, everybody's just figuring, look, let's take our chances, the hell with this. And, wear your mask wherever. But, it just seems, for me anyway, it's gotten ridiculous already. So, well, the pattern tells me that this is like, let's get it, move on. And so let's assume, okay, for a moment, we have to make some assumptions because it gives us our bias based on what is, and then what's likely to happen is that this, at some point this week, I think, or into next week, should start to do this. And so once this begins to happen, it'll be time for us to be very cautious on the long side. I showed you the sentiment. Now, if this occurs, breadth is going to get to an extreme. And then at that point, we're going to see corrections begin. And that's just, the cycle. So we got the sell signal here. We got the correction. And at this point in time, this pattern is saying that this correction should be over. So let's see where it goes. All right. Bonds. All right, chopping around, they pushed up into resistance. You look to the left. You don't need trend lines, fib lines. Simply look to the left for support and resistance. You guys in the chat room hear me say this on a daily basis. Those of you on YouTube that may be new, you're going to hear me say it as long as you're here. You don't need all of this hocus pocus stuff on your charts that are in your trading platform and you are being preached to on the internet that you need Ichikumi clouds, fib lines, Elliott waves, Gann lines, square of 9, and some other kind of BS that's being sold to you. Oil, chopping around here, right? And so it's been holding up, right? Sellers step up on a new high, it comes down and it holds. And we got that reversal as well on Friday. You can see the weekly chart's been going sideways here. And anytime you got a sideways move like that, after a move up, it's saying it should keep going up, but at some point it's got to break out, right? So maybe it's ready to break out as well. Gold obviously is strong. All of this trillions that are being pumped into the system and more trillions are coming and so on. Gold has been saying, hey, you're going to get your inflation. There's too much liquidity. But at some point, interest rates have to start going up. All the intermarket things have to start coming together. Commodities going up, I guess, economy, I guess, can it get worse? I suppose so. But look, what we want to see is that everything starts to get better. And so oil is one measure of saying, hey, if there's a demand for crude oil, which is being used for different things around the world, well, that's a positive. Well, if things start to improve further, we should start seeing interest rates move up marginally. Not a lot, but we should see interest rates start to move up. We should see, the transports, and they have a relatively positive pattern as well with the 180 reversal on Friday, also starting to move up. So we want to start seeing all these things coming together. And Corona bill time to be over. Harris, every time Greg says Ichikumi, I crack up. It's a ridiculous thing. I could put it on the chart here, and when you look at it, what clouds and lines and all kinds of stuff all over the prices, and someone sells courses on how to read that crap, it's a crack up for sure. But that's the stuff that's out there on the internet. Let me show you how to read an Ichikumi cloud. Just look to the left. Is there support? Is there resistance? Is the trend going up, down, and sideways? But this is why people come to the markets and walk away devastated after losing so much money, because that's the kind of stuff that's stealing. And stealing is too strong a word. You're responsible for your own financial well-being, and doing your own research. But when you come to the markets, you think that this is what is needed, to make money, and it's not. Simplicity is what's needed. Anyway, enough of my preaching. You were right, Alex. That was my soapbox today. Again, all yours, Dan.
Good morning, everyone. All right, we have a bunch of opens, all doing fine. And I personally don't like big gapping days. It makes it harder to get on board things, but we definitely had a bullish bias. We actually had spider put spread and spider directional in the weekend letters, but now the gap's messing it up. I raised the stop on our Disney. Have a nice gap here. Maxim we had as a directional, and they're being bought out, so that one's invalid now. But yeah, when we were scanning together Friday afternoon, I have a huge bullish watch list. Let's look at a couple of these. NXTC gapping down in a bearish downtrend. That stock is sure not getting any love, but nothing to do with it here. This workhorse pre-market, it was weakening. Look here, my pre-market, and I was hoping we could sell a call spread on it, and then that's quite a bullish reversal, so nothing to do with it now. I saw W whiskey here. It was gapping down $7 at the time. Now it's coming close to reversing the gap. Just amazing. I continue to scratch my head. This market strength. And then Barron's, it seemed like there's a lot of people doing the same head scratching in the main first article. He was quoting a number of people saying, I don't know, people having to chase these winners. Big gap here, $30, but no pattern. Ecore, it looks like that's joining the little toy party today. I don't know what's up with that. ADI is the one buying Maxim. And that was on my long list also. That's a beautiful consolidation. But it gave up that pre-market, but we'll keep it on the list. Look at Pepsi here. So now, how they feed the public ideas, and the then they, okay, stay-at-home stock. So now they're telling people Pepsi is a stay-at-home stock because you're home eating snacks, watching Netflix, whatever. But it's a bullish gap. Let's keep Pepsi on the list for directional and a put spread. I have them right here in the middle window. This little guy got taken. Wow, look at this beautiful breakout right here. And then it had another late day breakout. Look at that, into the close. This is a 15-minute chart. In 30 minutes, it rallied 50% of its stock price. That was a crazy move. Wow. Cameron, your drop down, please. He's asking about Piton. Daily looks nice. It's too extended for me. I mean, I like getting on board the no-brainer times, which is right here over these three tails. that was your no-brainer entry. After that, for swing trading, there is no no-brainer entry. It's just getting on board a moving train. W brewing problems. What's a brewing problem? Alfredo square, same thing. It's a moving train. It's in an uptrend. That's a pattern I wouldn't trade on the daily. No way. Oh, Roku, folks, I also tightened our stuff. We have a put spread on that. I moved it to under 151 bucks. We have a nice gap. Yeah, all our gold stocks are doing fine. SIL, we're in. This is the silver ETF. We're in a number, not a great pattern to enter now. IAG, we bought this 1, 2, 3. A little ON, we have a bull call debit spread, and that's actually a 1, 2, 3. Nice weekly. ON looks good. CCXX. Big gap. It trades whippy and light volume, but Tehran, Friday was your entry. If you wanted that stock for whatever reason, that was your pullback to some minor support, bottoming tail, traded over prior bar's high, stop low. That was your beautiful entry right there. This thing took off last Thursday. Wow, that's still parting. Wow, 340 gapping up to 940. Holy cow, what is up with that? DPZ, yeah, that's on DPZ. I have pizza on our long watch list. Looks fantastic. His cousin DPZ, yeah, cousin. I told you Friday I liked it. Yeah. Now that would be a fantastic 1, 2, 3 if we get it, which is the subject of Wednesday's MT Live. Micron, this was going to be on my put spread watch list. Gapping up, we'll see what it does in the first hour. IYT, I like as a put spread. Look at WY here. I almost put this in the ladder as a long breakout from multi-week consolidation. But, I got to the point of I had too many trade ideas for you all. So I just left it here. And it still looks good. Pidco, this is also swing and put spread watch list. Maxell, that's a bullish 1, 2, 3. After a bullish gap. Lulu over the highs, put spread. There are so many compelling patterns right now. Golf Tango, that looks beautiful. Wide range breakout, buy setup on the weekly, breakdown failure, small little downside shakeout. That looks fantastic. Golf Tango. And in fact, I like this one as a core trade. Now I know the monthly's still in a downtrend and it's actually a sell setup. I do get that. But it's the daily and the weekly. Look, if this is the turn, look, we made higher high and higher low, then we're nailing the entry. And then, we would just hope that, look, major multi-decade support. It bounces off $5. Yeah, Khaled. Yeah, I know. It's on, I know. Yeah, I don't come here and just, regurgitate all of our weekend trades. I'm just going through an interest list. But yeah, Golf Tango. I like a lot. Blue, this was something I think Debbie was watching last week. It's also a 1, 2, 3, kind of reverse head and shoulders. Here's your head, left shoulder, you know, not perfect, but it's all the way back to the neckline. And it's a breakout on the daily and the weekly. That looks good. EXAS looks higher. EVER looks higher. Alanine did look higher, but now it's gapping down. So actually, we'll keep that on the list. Maybe a bear call credit spread. And Agilent, it's bullish consolidation, bullish weekly, monthly. Over last week's high, that looks higher. Pot stocks, I'm not getting TCNN, Jason, GBTIF. I'm not getting either one of those. I don't know why. TCNNF. There you go. Yeah. Yeah, that's finally your something something. Let's check the monthly. Yeah, monthly's not a core trade. But yeah, for swing trade, the daily, that's yeah, that's a nice bar. GTBIF. Now I like that one much, much better. Why, Jason? What is my eye looking at? Much better. As I put it on the thumbnail. Absolutely. Well, they both have a wide range igniting on the daily, but you're close. The weekly and monthly have much more upside than that other one. See, the other one, the monthly was extended at a prior high. This looks fantastic. So I'm going to put that over here, GTBIF. All right, we're short naked calls on Beyond, and it's relative weakness today, so that's a good sign. Google is a swing trade. I mentioned to those on Friday, somebody asked me, is it okay to hold it as a swing? Was it extended? And I said, no, it's not extended. It's been resting sideways 4 days. I'm not crazy about entering any of these big, gappers right now as new swings and with a big market gap up, but I need to wait here a little bit and see how, this gap is handled. I'd be more thinking of selling some strength right here. I think JR is asking about aluminum. It's a dead animal. We actually bought this breakout a week or so ago, and we stopped out break even. It's just dead. It's not participating in the recent strength. It's going sideways. Still in an uptrend daily, weekly, resistance monthly. So I just don't know what to do with it. Glancing at our opens. We also have a call spread on this little guy, F Sly, over Mattel. I like. Lima Bravo looks fantastic. Look at Lima Bravo. I like that. It's a put spread and or swing. AMAT, if it can get above these highs. The semis have been strong. IYT we have as a put spread. That looks fantastic. Gapping up now, bullish engulfing. Let me check our quotes. Juice bar. Our Roku is moving nicely. We have a put spread. SNX, yeah, we're in SNX too. We had a ton of opens in the swing winner.